And so our ugly question is it normal? Is inflation running rampant? Or is it normal to see an $800 increase in a refrigerator in just 1 year? Well, we were talking about that a little bit earlier. No, it's not normal. And yes, inflation is, again, we don't know if it's going to be temporary or if it's going to be long term.
Yeah.
I know there's inflation because of supply chain issues, but there's also inflation caused by too many dollars chasing too few products. And if we have, and it depends on government on what they're going to do. I will tell you this: the Fed has decided to start tapering their purchasing of Treasury, U.S. Treasuries.
Yes.
Which is going to do a couple of things. One of them is going to raise rates because you're actually going to be able to sell bonds at a normal market price instead of having a giant government.
Wouldn't it be interesting if it didn't raise rates? Wouldn't that be interesting?
Yeah, I don't think that's going to happen, but it'll be more of a market value. Jonathan and I were just talking about this yesterday. There are banks now selling the risk of their short-term loan. So when a regular mortgage company makes a loan, the way they operate their business is the bank will give them a line of credit that lasts for typically 90 days. It's a revolving line of credit. So when they make a batch of Fannie Freddie loans, they have 90 days to sell it to somebody else or to Fannie Freddie.
Yeah.
And if that loan defaults in that 90 days, then the bank's kind of holding the. Actually, it's the mortgage company kind of holding it. They have to buy it back.
Correct. They do have to buy it back.
But at some point, if the mortgage company can't pay it, then the bank is on the hook for it. So they're selling the risk to people
the default risk
to people that are chasing yield. And you're
I love that you use the word chase, like the phrase chasing yield.
Well, they are.
Because tell what they're paying.
They're paying. They're getting 5%.
Whoa, they are chasing a big whale, a well of a yield there.
Now think about this though: the risk to a defaulting Fannie Mae loan. Remember, Jonathan was just talking about how much harder it is to get a Fannie Mae loan. The credit scores are higher, the debt to income ratios are much lower. So it's harder and harder to qualify for one of these loans. The chances that you're going to default in the first 90 days are minuscule.
You would think so.
Don't you think?
Yeah.
But there was a bank out of Texas, I believe it was. They sold $275 million worth of these default risks. And, they're getting paid a 5% return for this. So
I get it.
Again, we were joking that even junk bonds now are returning, 4 and 5% in yield.
That's true.
When it used to, back in the day, you were getting way in double digits on junk bonds because again, there's a reason they call it junk.
They're really good.